where are we sitting? How has the year treated the housing market?
Jeremy, really, during the course of this year, the market has really performed relatively poorly compared to where we're coming from a couple of years ago. And I think it's to a large extent related to the broader economic environment. You know, the consumer still very much under pressure. We're almost 2 years out of the recession, but the consumer is suffering in terms of employment. Employment is a major problem in the country. We've seen inflation picking up in recent times, so it means that the spending power of the consumer is being eroded all the time. And then many consumers are sitting with impaired credit records or damaged credit records, which means that it's very difficult from the bank's point of view to actually do business with these guys.
Those levels are still sitting around the sort of top 70s, aren't they?
That is correct. The debt level as a percentage of disposable income is around about 76%. It's a little bit down from the 82% that we've seen in 2008, but not really back to the levels of just about 50% that we've seen in, when was it, in 2002. So still a major difference there, and it will take some time for that situation to improve gradually further.
Okay, let's look at that as a starting point, because right now, if I look at, and I may be totally wrong here, you need to guide me. If I look at the whole market, what I'm seeing is you've got interest rates at the lowest of lows for
3 decades plus.
Yeah.
Yeah.
You've got houses which are being sold at very good prices.
That's correct.
So surely, if you have the ability to get the loans from a bank, you should be buying into this market right now with a view, a long-term view on it.
Absolutely, I have that same view.
Now, having said that, you say that the indebtedness levels are sitting in the high 70s. Where is it comfortable for a bank to start lending to somebody? You know, what sort of level is it? Is it 50, 60%, 40, 30? What? Where are we looking?
Well, most probably a little bit lower, but there are a lot of factors that banks normally take into account when it comes to their lending criteria. I should say they start to look at the broader economic environment, the economic cycle. We know what is going on, especially globally, and the possible impact of that on South Africa.
Right.
The second issue is the household finance environment. Where are debt levels? What is the situation in terms of credit records? What is inflation doing to household spending? And also the next issue is the property market cycle itself. Is the property market cycle on an upward trend? Are prices actually increasing? If price growth is very low and nearing the zero level, then the possibility becomes greater that the asset that you as a bank is actually financing might be losing value. So they have to take that risk also into account. Then we have to keep in mind the National Credit Act and all those stipulations. And in the end, the consumer credit profile. So against that background, those things have not been that positive over the past year in terms of the property market. And these factors in the end had a negative and a sort of a subdued effect on the property market.
In your opinion, where are we in a cycle here? Have we hit the bottom yet? Are we starting to move out of it, or is it still going lower?
Well, Jeremy, I believe that we have reached the bottom in 2009 in terms of the property market, when we had the recession. After that, it was a gradual upward trend. Last year, we've seen price growth across the board of around about 7%, according to our calculations. Not a major improvement, but in 2009, there was a slight decline in prices across the board. So some improvement in 2010. First half of 2011, further improvement in price growth, but it seems like that price growth is peaking, which means that price growth can move to an even or slow down towards the end of the year again. And we picked that up from the latest month-on-month price trends. And there we've already seen for the last few months, I should say since the beginning of the year, that price growth on a month-on-month basis tapering off all the time. So eventually that went over into slower year-on-year growth.
Where is that happening? Because it's not. I would imagine it's not just across the board. Is it happening in the sort of high income bracket or the middle or low? Where's it
Yes,
being affected?
the biggest demand for property and where we see most of the activity is to the middle segment and smaller sized properties.
When you say
of
middle to smaller size, what are you talking about? Let's try and define it.
According to our calculations, we define the middle segment as 80 to 400 square meters, but then we divide that segment into 3 further segments: small, medium and large, 80 to 140 square meters, 141 to 220 and 221 to 400. So just to differentiate within that middle segment, and obviously then you can also look at the affordable market right at the bottom end, or the luxury market at the upper end. But most of the activity takes place in that middle segment, but in that middle segment, even to the medium-sized and the smaller-sized housing, and it's all because of affordability. Affordability of housing has become a major factor in recent times, not only to afford a property, to buy a property, but also to run a property. If you take into account municipal rates and taxes and levies, they've been increasing quite substantially in recent years.
Don't we know?
And it will most probably be the case. So
don't we know?
Absolutely. So those factors will remain important factors moving forward. So the focus is to a large extent towards the lower end. But if you look at the regional level, say maybe at the geographical level, your coastal markets are really suffering at this stage, because we know that there is a large investment focus in those markets in terms of stands and buy-to-let, not really buy-to-let properties, but leisure properties. And when the guys pick up problems in terms of the finance, say the guy sitting in Gauteng, what does he do? He will put his leisure property first on the market and try to get rid of that.
Are we still getting the foreign investors coming in, talking about those coastal markets?
Yes,
because they were very big into those
Absolutely,
coastal markets.
Yes.
Are they still coming in?
I believe so. I've recently had a talk with a guy down in Cape Town, in Camps Bay, one of the estate agents there. And apparently with the rand that is depreciated in recent times to above 8, they had some quite interesting activity there again, and a lot of inquiries about buying property in those specific areas around along the Atlantic seaboard, especially from foreigners. So the rand definitely plays a major role, especially in the upper end of the market along the coastal areas.
Yeah, I would imagine. I mean, if you look at the what the rand's doing to the euro these days, if you're sitting on euros at around 11 to the rand,
that's correct.
Something in Camps Bay is looking a lot more attractive.
Absolutely, yes.
At 100,000 euros.
Yes, no, for sure.
Which to a South African is we're going to turn around and say 1.1 million for that 30 square meter little place in Camps Bay. No, thank you very much.
That's correct.
Let's go back to this definition now. You spoke about sizes of properties. What sort of value are you looking at those properties in the mid section?
Well, in the larger sized houses, we're looking at about 1.5 million on average at this stage. Okay. Towards the middle or the medium segment, it's around about $1 million, and lower, around about 600 to 700,000 at this stage.
Okay. Then let me come back to the starting point. I have just finished my studies at university, and I have now moved to Pretoria. I don't see how people starting off can afford to buy a home anymore, because the prices are just absolutely out of reach.
No, for sure. You know, for people coming into the market for the first time, say entering the labor market for the first time and wanting to buy, it is not that easy at this stage. Even at a smaller size property, at 600,000 to 700,000, will cost you quite a couple of thousand per month to service a mortgage bond.
Exactly.
So what these guys normally do is that they rent for a certain period, say a year or 2, 3, until their finances are stabilized or improved a little bit, and then they will start looking at buying property. But at current price levels and current price growth, I still believe it is not a bad time to buy. Maybe it's not a time to sell, but if you have by any ways the means to put down a deposit, I don't believe it is really a bad time to buy property.
How should you? Okay, let's presume. Let's move on now to a possible investor in property, because as you pointed out, the rental market is good.
Yes.
Because people can't afford to buy houses. what sort of leverage would you put on that? I mean, what if I came to you now and said to you, Jacques, I've got 300,000 rand. I want to buy a property to let. How much should I be borrowing, and how much should I be putting down?
Well, I
want to leverage the low interest rate now.
I think it depends on your own financial position, but it will be good to put down a deposit. And I don't believe that you should really invest in buy-to-rent property above $1 million. Above that level, it will become more difficult to rent that property. And if you say want to sell that property after a year or two, 3, you will also, on the current market conditions, it will not be that easy.
So where should you be looking at? Sort of 600,000-700,000
Yeah,
rand?
between 600,000-700,000. You can even go up to, say, 900, maybe $1 million, but not beyond that level, because that is where the big demand for property is at this stage in your more formal market.
Okay.
Say for people entering the market for the first time, or for your middle to higher income investors, they will most probably focus on those type of properties as well. And it will be most affordable for your guy that wants to rent those type of properties. When it comes to, say, a property of 2, 3 or 4 million, you're talking about 16,000 up to 20,000 plus per month. And you will find that that market is relatively small. So when it comes to buy-to-let, really rather focus on between 600 up to 900, $1 million, I should say.
That's very good advice. Thank you. I just don't have 300,000 rand right now, so I can't do anything about it, to be honest. We're talking about property values and looking at the property market 2011. Jacques du Toit is our guest from Absa in the studio. He's the property analyst at Absa Home Loans, and we'll continue talking with him in just a moment. Don't go away.